please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the Lal Street, the markets ended mixed on Friday after a day of tepid trade. The Sensex ended lower with cut of around 45 points, while the Nifty ended just above the flatline, tad bit in the green. The banks too ended lower, losing about 41 points at close, with Yes Bank being the top Nifty loser. The mid-cap index outperformed major indices to gain around 0.4% at close. In fact, on that note, let's get in some market opinion from Andrew Holland of Avendus Capital on the depreciating rupee trajectory and the sectors to bet on.
What could make the rupee depreciate more would be if the US and China have a trade war, because I think that would spiral emerging market currencies even further, including India. So that's what you'd have to expect. But fundamentally, without that, then I think the 70 is about the right level. You will have times when the currency will be a tailwind for the likes of IT and pharma. And IT we like, pharma I still can't sleep at night with all the different regulations that come out and either hit the share price or move the share price. And again, I still think it's a sector which needs a lot of change in terms of the management thinking going forward, because in terms of the generic side anyway, pricing is not going to come back to you. So you've got to change your business model. And that's very painful. You saw it in telecom, you've seen it in IT, and it's still going on in IT, and pharma is still starting. So it will, I think, how I would put it for pharma is that I probably don't want to own it, but I don't mind renting it.
All right, so that was Andrew Holland, but with that we'll go across to Nigel, who's sitting with us. Nigel, what are the cues you're working with in trade today?
Well, very good morning first, Mangalam, as well as Anisha, and just wishing you all a happy Janmashtami to all our viewers as well. Well, that could be a bit of a a play today, right? I mean, that could volumes could be a tad bit lower because some part of the markets will be shut. I think it'll be a banking holiday as well. But let's tell you about the markets. In fact, the SGX Nifty, I was hearing you out. You were saying that the SGX Nifty is expected to open up with a gain of around 20 points odd. Remember, we started the September series on a flattish note. So the first day of the series was on Friday. And in fact, the Nifty ended more or less flattish. The mid-cap index did a relative outperformance. The Indian rupee, well, it ended at the lowest levels we've ever seen. And remember, that's helping a couple of sectors actually, because the IT and the pharma index, both of them did put on good weight, 1.5 to around 2.5% were the gains that we saw both on the IT as well as the pharma index. We should get that plate as well up for you on the screen. I was looking at the February series at the start of the February series, and in fact, there are some similarities. If I just take a look at it with the September series and the February series, two factors play out there. One is that the total open interest levels are at elevated levels. That's around 2.5 crore shares. That's the open interest. And importantly, the FIs as well, they're net long on the index. So that's the other factor. Remember, in February, the FI's net long position was at around 80%. This time around is at around 60-65% approximately. But let's tell you about the FI flows first. The selling has slowed down, particularly in the month of August. But not just that, even the DII buying, that as well has slowed down. So that's just in terms of the flows. If you're looking at the futures, premium on the Nifty future as well, that's at around 55 points odd. So that as well is at a bit of an elevated level. Now let's come back to Friday. On Friday, the FIs added short positions to the tune of around 15% approximately on a rather small base. But in totality, it was nearly around 15,000 contracts that were added on the short side. So that's why now the short positions from the FIs on the index futures, that's gone up from around 36% all the way to around 40% odd. So they're still net long. If you're looking at the options data, well, in Friday's trading session, I told you, yes, they added shorts. But remember, they bought puts as well. So they're perfectly hedging themselves. And overall as well, they bought more puts than calls. You're looking at the writing side then, they did write more puts than calls. And overall as well, they've written closer on 2 puts for every 1 call. So in short, they're not expecting a big downside because the smart money is going on writing some puts and eating to the premium. Levels you're looking at, well, on the downside, the 11,600, 11,500 level, that should be an important level, remember, because, there's a lot of open interest additional there. In fact, the maximum open interest is at around 11,600 put on the downside. On the upside, well, it comes in at around, that 11,800 call out mark. So those are basically the two pillars for the markets. Two economic data that we're looking at. The GDP data looked very, very good. I think Lata was calling for a kiss for that particular data. You know, those numbers look very, very good is what, Lata was telling us. She'll join us later. The manufacturing GDP number looked very, very good as well. So that's a positive, the GDP number. But I'm a little worried about this GST collection number. Now, that's come in sub 95,000 crores. Or some part of the street, yeah, you were expecting a bit of a tepid number. But now the problem is that we have 4 months. You know, we have got collections till July. The asking rate is more than 100,000 crores, 103,000 crores approximately. And on an average, we're doing around 95,000 crores. So in short, the deficit on a monthly basis is at least 6 to around 8,000 crores odd. And with Brent crude prices at around $77.5 per barrel, that's not good news, because a few economists said, yes, Brent crude prices could move up, but that's not the biggest worry. If you have GST collections that pick up, that's what could, offset this Brent crude price spike. So Brent crude at around $77.5 per barrel, Indian rupee at around 77 rupees odd. Not great news, particularly when your GST numbers are not picking up.
So Nigel, you set up the macro picture for us in terms of GDP, GST, currency as well as crude. But in terms of the micro data, what are the stocks we need to watch out for? A lot of acquisitions, deal wins, and of course the auto sales data. Yeah,
the auto sales numbers, I'm sure, our viewers and all of you as well would love it if, once Sonia comes and tells us about those auto sales numbers. But since you asked me, I'll just tell you a few numbers. Maruti's numbers didn't look that great. They have close to around 10% of their exposure to Kerala. So that could be one of the reasons why we saw a bit of a degrowth out there, lower than Nomura's expectations. Mahindra and Mahindra, well, those auto numbers look better than expected due to a traction that we saw in the LCV segment. The auto sales came in higher by close to around 14% odd. The management is saying they're expecting better traction in the upcoming festive season as well. Moving to Escorts then, well, those numbers didn't look that great. If you look at it, the total sales came in higher by around 4.9% odd, and the absolute number is the lowest that we have seen since December 2017. Tata Motors, though, the stock was, seeing some kind of action in Friday's trading session, and the India piece is looking very, very good. I was looking at a couple of brokerage notes. Now the India piece is contributing nearly around 35 to around 45% of the share price. So, Tata Motors numbers look quite good. The total sales numbers were higher. The CV sales growth as well looked quite strong. Let's get that number up for you on the screen. And even Ashok Leyland, there the total sales numbers came in higher by close to around 25%. Now that number looked very, very good, much better than any estimate on the street. Both the MHCV as well as the LCV number look good. Aichi Motors, remember, more than 10% contribution coming in from Kerala, so those numbers were more or less in line actually, if you're looking at those numbers. TVS Motors, well, there in fact, the numbers looked a little flattish, growth of around 8% approximately. The mopeds in that segment, in fact, there was a degrowth of close to around 10%. Hero Moto, we have been getting used to these big growth numbers. Well, in the past month, the growth was only around 1% approximately, and more or less in line with what Nomura was expectation. The other big factor is going to be the Supreme Court has banned any further construction in Maharashtra. That's because, in fact, the states have failed to frame solid waste management rules. So, few stocks that have exposure: Suntech, Kolte Patil, Oberoi Realty, Godrej Properties. We'll keep an eye out on all of them. And other big stocks we look at, BHAL, well, there's a rating upgrade that's come about. So that's one stock you should look at. It's already had a bit of a run in the last couple of weeks. Coal India, well, the production number didn't look that great, but it's coming on a rather high base. So most of the street, well, they're okay with around a 4%, a 3.5%, 4% growth is what we saw in terms of dispatches. Graphite, small acquisition. They have to do something with the cash they're going to generate. So keep an eye out on that stock. And finally, MOIL, it was expected they're going to be going ahead and hiking prices. The stock has seen a big run in the last couple of weeks. Well, that one as well is going to be in focus because they've increased manganese ore prices.
Okay, Nigel, thank you so much for that. But just elaborate on the point on the construction bank that you talked about. Now, the order from the government, from the High Court actually, from the Supreme Court actually leaves a lot in terms of ambiguity, because it just gives a blanket statement that further construction in the states or union territories of Maharashtra, Madhya Pradesh and Uttarakhand will be stayed until the policy is formed. And the next hearing of this particular matter is on 9th October. Now, the key question that we're asking is whether this is applicable to the blanket construction, including the likes of infrastructure and state government orders, or if it is just applicable on the construction of some buildings. Now, the reason we ask this is because, remember, till 6 months ago, there was a 2-year ban when it comes to Maharashtra, and there was a workaround for that because the projects which were under construction were allowed to continue the construction, and even for the new projects, if you got the required regulatory approvals, you could have started construction. So the question is whether this is applicable only to the private buildings, etc., which are the new projects, or even the under construction projects will stop. Now, this is important because the analysts believe that this could be a major blow to the real estate sector. The names like Godrej, Suntec, who have exposure to these states, as well as to the EPC contractors like Capacity, Ahluwalia, and even the likes of J. Kumar could be impacted if it includes the metro construction and road construction as well. Now, remember, this stay on construction will push the delivery of the ongoing projects. And remember, projects worth around 4 lakh crore is already significantly behind schedule. So this would impact a lot as far as the consumers is concerned as well. And that's why the street believes that yes, maybe for today, that will be a tad bit of sentiment negative. But do expect that the state or these contractors or the realty players will come up with either a hearing against this particular matter, or there will be a policy which is already in the works will come out. And that is what a lot of lawyers as well as state officials have given us the feedback, that the policy is already under works when it comes to Maharashtra, and it is expected to come out in the next 10 to 30 days, and it might get expedited given the fact that Supreme Court has given this order. But yes, as of today, we will see a tad bit of sentiment downtick on these stocks, but the expectation is that this will not stay for a long term, or the companies will find a workaround, because it is not possible that no construction takes place in all these states, Mangla.
Look at the Asian markets. The Nikkei is still under pressure, down about 0.5%. Along with that, we have the Korean index too, lower by about 0.5%. Not just that, we're getting in early rates from both Hang Seng as well as Shanghai. They are lower. The Hang Seng down by about 140 odd points, which means 0.5% lower. The Shanghai index too down by about 0.4%. What in this sea of red is standing out? Well, that's the SGX Nifty indicating an outperformance, and it is still in the green to the tune of about 30 points as we speak. 11,760 thereabouts is where the open is indicated. Perhaps this could be on account of the first quarter GDP that has come in at 8.2%, much better than street expectations of 7.7%. Agri, manufacturing and services have seen traction. Lata Venkatesh now joins us with more on the GDP. Lata, it called for a kiss.
Oh, yes. Well, 8.2, we haven't seen that in about 8 quarters, and so obviously one was overwhelmed by the number. And also, as you pointed out, it's come from several quarters. Agri looked good, 5.3. Remember, the kiss was at, 555, when the numbers were just 20 minutes with us. So, yes, it was firing on all cylinders, and especially labor-oriented industries or sectors like agriculture, construction coming in at over 7%, manufacturing doing exceptionally well, but then that was on a contracting base. And services were okay, but then that was on a very good base. So even then, it looked like a very good number. But then sobriety sets in thereafter. When you looked at a 2-year period, that is from FY17 to FY19, first quarter to first quarter, then over the 2 years, the growth has been 14.2. I'm just saying the bland number. And then it looks like, 7.1% per annum. It is still better. See, that 8.2 was still better than the 7.7 that everyone expected. So whatever else you do to the numbers, the headline number was still better than what people expected. And there is an expectation that, as you get to elections, there is always an aggregate excess spending that happens. Either more cash is in the system, or for a whole host of reasons you do get. And then there's rupee depreciation. That also creates growth. So it is possible that people will revise up their GDP forecasts. We'll have to wait and see. But let me point out to the pain points. The pain point, as I told you, if you look at the average, then it's not a gung-ho number. It is 7.1. Agri deflator was very, very low. So clearly there is pain in farm India. Non-farm rural India has done well, but farm products, the agriculture deflator was rather poor. Now, although people will revise their GDP forecast higher, or likely will revise it higher, the problem is that with it will come expectation of a rate hike as well. Considering that there is a rupee depreciation and higher crude prices, we were anyway expecting it. Now a rate hike is in October policy is right back on the table. So for today, you should also be prepared for higher yields.
Okay, Lata, thank you so much for that, putting that into perspective. So an all-round growth is what we saw as a result of that GDP number. Important to see if there are any changes in the estimates of GDP or the rate high expectations going forward. But we also spoke to a whole host of experts on the subject. Listen into what they make of the GDP numbers.
My sense is that on a headline basis, the numbers which on the GVA numbers could be actually maybe a 40-50 basis point impact, but the impact on the GDP could be actually higher than what we have estimated, and there's actually your 7.1 and 7.2% conjecture comes. So GDP obviously has been held by a stronger base, much more than even the GVA base, because we also had that indirect taxes and subsidies part which is contributing to that. If the central bank is not in favor of too much of depletion of foreign exchange reserves, it could look at other options to defend the currency if it continues to depreciate. And against that background, I think one of the possible options, textbook prescription, is foreign policy rate, is a rate hike. So that is the thing, that we need to see whether that is the thinking, or it wants to see some of the numbers play out before trying to stem a fall in the value of the rupee if it continues to do so.
8.2 is still a good number, but it's like the curate's egg. I mean, there are good parts and bad parts. While I think we should all be very pleased with these numbers, especially because of agriculture and construction, two very labor-intensive sectors, we should be a little concerned that we don't go into a state of euphoria, because my own sense is next quarter we'll be looking at something closer to 7.5%. As far as food grains are concerned, it's always hung around 2-2.5%. I mean, there's nothing. Practically all the growth in crop agriculture has come essentially from vegetables. So if you take the total GDP deflator and you correct for the low agricultural price increase, what you are getting is an enormous increase in non-agricultural prices, unacceptably high levels. So what you are talking about is not that agriculture, the farmers are making roughly zero additional income. They're actually getting negative real incomes. That's what it's saying. So when you're talking about headwinds, this is a big headwind.
Oil at 77 this year is a negative terms of trade shock. And remember, monetary conditions are beginning to tighten or have tightened the last few months and may tighten more of the currencies under some pressure, and the RBI has to move. And the deleveraging is progressing, and that's going to have some dividends down the road, but we're not seeing credit growth accelerate sharply. So I think if we can end the year with 7.3%, which is our current forecast, I think India will be doing very well in a turbulent global environment. The 8% is in large part because you had a very weak base of the same quarter last year. But we had all built that into our forecast of 7.5 or 7.6. So the fact that it's surpassed market expectations suggests growth is really strong. I think it's easy to read the numbers and say industry is growing at 10%, services at 7%, this is all manufacturing industrial led. My reading is exactly the opposite, because if you go back 4 quarters ago, the 10% industrial growth is on a base of 0.1%. In fact, in our view, the upside surprise happened on the services side, because services were contending with a base of 9.5% growth in the same quarter last year. On that base of 9.5% to grow above 7, I think was very impressive. We've been arguing for a while that some degree of currency depreciation is good, it's healthy. We've had a 6% real depreciation in the first 6 months of the year, and already in the second quarter, the drag from net trade, exports have picked up, imports are still strong, but the drag from net trade in today's GDP number is meaningfully less. It's the lowest in the last 5 quarters. So these things do pan out eventually. The more the exchange rate works, the less we have to curb aggregate demand to contain the current account deficit.